As we navigate economic uncertainties, utility stocks have quietly outperformed the S&P 500 this year. Power demand is soaring, even while tensions rise from tariff issues. But what does this mean for investors? Year-to-date, the S&P 500 Utilities Select ETF, known as XLU, is up over 6%. In contrast, the broader S&P 500 index has seen a 4% decline. Tech stocks like the XLK have dropped 8%. And consumer discretionary, or XLC stocks, are down 11%. Even after tariff announcements, utility stocks fell, but not as dramatically as other sectors. Daniel Rich, an analyst at CFRA, notes that utilities are minimally affected by tariffs. Most utility companies depend on domestic labor and materials for their capital investments. In fact, the utility sector's strong performance follows a remarkable 23% gain in 2024. This surge is driven by an AI boom and the trend of onshoring manufacturing. Both factors have massively increased electricity demand. Despite recession fears linked to trading tensions, power demand shows no signs of slowing. Goldman Sachs reported a striking fact. Year-to-date power demand has risen by 5.5%, compared to an annual growth of just 0.6% over the past decade. This increasing demand spans residential, commercial, and industrial sectors alike. The Energy Information Administration projects that the fastest-growing electricity demand will be from the industrial sector. This growth is especially tied to new semiconductor and battery manufacturing plants coming online. Additionally, energy consumption from data centers is on the rise. Recently, Duke Energy announced it signed agreements for nearly 1 gigawatt of data center projects in just April. CEO Harry Sideris expressed that we are witnessing unprecedented load growth that will require a decade of infrastructure development. Duke Energy stock has risen by 13% this year, while Southern Company and Exelon stocks have gained 12% and 23% respectively. Furthermore, big tech companies are recognizing their power needs. For instance, Constellation Energy and Microsoft are collaborating to revive a unit of the 3 Mile Island nuclear plant in Pennsylvania. Google also announced a partnership with Elemental Power, marking yet another move from big tech to secure electricity. This follows significant deals from Microsoft and Amazon linking them to energy providers for future electricity needs. In summary, while many sectors struggle, utility stocks thrive amid rising power demand driven by technology and manufacturing growth. With projections indicating continued demand increase, there's a strong case for potential investment in utility stocks. If you're considering investing in utility stocks or just want to learn more about market trends, subscribe for more insights. Your understanding of these shifts could be your advantage in the market.